Bam. What is going on, peoples? What is going on? We are on. We are live. We are live on what is this today? Is Wednesday, October 8th. What's going on, peoples? We got some viewers in the house. What's happening? What's happening? It's your boy AB, and this is the Profit Report. I'm reporting live from New Orleans, Louisiana. What is happening? We are back tonight. We are back tonight with another uh breakdown, guys. We're going to do a big breakdown on a big bank. What's up, peoples? What is going on, man? Say what's up in the chat. If you're in the house, say what is going on. Say what's up. Talk to your boy. Talk to your boy. Let me know what y'all think about Wells Fargo. Who you bank with right now, guys? Do you guys bank with Wells Fargo? Anybody? Anybody here a Wells Fargo customer? Anybody a Wells Fargo customer? What's going on? We got Bree in the house. This is actually requested by Bree. She was talking about how I'm thinking about it. Okay, so Bree's thinking about becoming a Wells Fargo customer. What do you guys care about when you guys are signing up for like a bank? You know, what is important? What is important to you guys? Is it like they have a physical location? Is it that their app is nice? Is it they don't have a lot of fees? What's like important? Do you even know the difference? Like, do you care? Like, oh, this bank this bank that. Like, or is it just, hey, whatever? I mean, how do you decide? I think a lot of times we just kind of go down the street and see whatever is up there. We just kind of like, I know, like in Houston, Chase Bank. Chase Bank was all over the place. So a lot of people in Houston got Chase Bank. Actually, out here in NOLA, I don't see a lot of like these big banks. To be honest, I see more like local banks, banks that I've never heard of. I know, like in New York and stuff, Chase is a lot, but then but there's also like TD Bank. It's like a regional thing. You go to like some other part of the country, and there's a different bank. So that's physical location Bank of St. Charles. We got AJ in the house. What's going on? Bank of Poitras. Yeah, man. Yeah, like over here, man, I see like banks I never heard of. Whitney something, I think, is the big one out here, but it's not like the big banks. It's not the big banks. So Wells Fargo, right? What are some, like, I know we got some tea. We got some tea back in the day. Wells Fargo tea. I look for low fees. What kind of fees are they charging these days? Isn't like everything pretty much like feeless? Wells Fargo scandal. What do you guys know about this Wells Fargo scandal that took place? You guys remember this? This was back in 2016. HJ, what do you think? What do you look for when you're looking at a bank, guys? We're looking at Wells Fargo. What's going on, people? Welcome to the show. This is your boy AB. This is a Profit Report. We're breaking down Wells Fargo. We're breaking down Wells Fargo, but we're gonna get into a little bit of tea right now before we get into the numbers. We kind of want to know, man, what happened to these guys since 2016? Because they was on some weird stuff, man. Look at this Wells Fargo scandal. Creation of millions of fraudulent savings and checking accounts on behalf of clients without their consent or knowledge due to aggressive internal sales goals at Wells Fargo. Look at that, guys. They were opening savings and checking accounts without you knowing. I think all banks are the same. Get a brand name once so they don't vanish. Yeah, you guys know about the whole what was that 2023 bank crisis. What was that bank that crashed? Yeah, Silicon Valley Bank. Y'all know about that guy, that bank? It was like there's a couple of banks that like went away and people were freaking out. Uh yeah, so Silicon Valley Bank failed when a bank run was triggered after it sold treasury bonds, blah blah blah. But you got your FDIC. Even the big banks aren't safe now. After 250, what do you do? Like, if you got okay, you got 250. I mean, that's something at least. So the government is gonna pay you up to 250 if the bank like goes out of business. But then like after 250, you're screwed. But I guess most people, are kind of safe with that. Um, you guys know why this started, by the way? Was created in a Bank Act of 1933, enacted during the Great Depression to restore trust in the American banking system. More than one third of banks failed in the years before the creation, and bank runs were common. The insurance limit was initially 2,500 per ownership category, blah blah blah. But yeah, this happened, guys, during the Great Depression. So let's see the history. There's a lot of banks that were failing. So Franklin D. Roosevelt, FDR, put on this thing called Federal Deposit Insurance Corporation, FDIC. FDIC. So if you look at any bank, they all say, you could look at Chime, you could look at any of these like online banks, they all have to say FDIC insured somewhere. Somewhere in there is talking about FDIC. Let me see. FDIC. Bam. Bam. Chime is a financial, not an FDIC insured bank? Really? Okay, okay. The bank services provided by the Bank Corp, member FDIC. All right. So you gotta make sure any bank you were signing up. Most banks are FDIC insured these days, but member of FDIC, right? So that's kind of what Hassan is talking about. FDIC is like JD Power Associates. Yeah. Well, Wells Fargo is too big, right? So Wells Fargo, let's go back to Wells Fargo. It's part of the big four banks in America. So Wells Fargo is part of the what's considered one of the big four banks in America, next to Chase, Bank of America, and Citigroup. So Citibank, Chase, Bank of America, Wells Fargo, those are the big four. So we're talking about a big bank here with a lot of money. A lot of money being managed, a lot of money being held there, deposits, all this other stuff. So well, let's go back to the scandal, right? So we had this big scandal that happened with Wells Fargo back in 2016. Let's see what happened to them. So we had it. News of fraud became widely known in late 2016 after the Consumer Financial Protection Bureau. Do you guys know about this government agency? Consumer Financial Protective Bureau. These guys are the ones that be investigating like fraud and shit. They fined the company 185 million. The company faced additional criminal suits reaching an estimated 2.7 billion dollars by the end of 2018. The creation of these accounts continue to have financial, legal, and ramifications for Wells Fargo as recent as 2013. Look at this, man. Wells Fargo clients began to notice that the fraud of them being charged unanticipated fees and receiving unexpected credit or debit cards or lines of credit. So these guys were not just opening accounts, they were opening credit cards and like lines of credit. So I guess, when you walk in and you got the dude sitting at the, the little banker, and they get like a little kickback for opening an account. They get a little incentive for opening an account. So, They're telling you, hey, open a checking account, open a savings account, open a CD, open this. They get a little, it's part of like how they get graded. It is part of how they get graded as an employee. So that was kind of the pressure that these guys were on. So imagine you thinking, everything is good, and then there's a credit card opening your name. So this blame was later shifted to a top-down pressure from higher level management to open as many accounts possible through cross-selling. The bank took few risks in the years leading up to So let's see. Fraud. We have this Los Angeles 50. The bank fired 5,300 employees. Damn. And discontinued sales quotas as individual branches after announcement. The CFO said the bank had invested 50 million to improve the branch and blah blah. You go to the Senate, of course, they're gonna grill your ass. The bank experienced decreased profitability, blah blah blah. So let's see their stock actually, like back in those days. What happened to them? So bam. Look at that though. Nothing really happened. Wait. So the scandal broke. Okay, they were like trading at 57. It kind of went down a little bit. Not too bad though. They didn't take too big of a hit. They went down like what, 20% down. I mean, I guess that's something. But then not too long after that, they came right back up. Look at that. So this scandal didn't really affect them. Not really. It kind of went on a run afterwards. Kind of went back, and then something happened. Oh, it's COVID happened here, and the whole thing crashed. Man, they went from 50%. Look at that COVID. They were down all the way to $23. Big drop, and then big up after that. But look like it didn't really affect their stock that much. All right, let's see what happened. So 85,000 accounts opened, incurred fees totaling 2 million. That's not that bad. For a bank that's making billions of dollars, for you to risk your whole like reputation on $2 million is crazy. Consumer credits were also likely hurt by the fake accounts. The bank agreed to settle for 142 million with consumers who had accounts opened in their name. So, but I've heard like bad things about Wells Fargo. They say like their mortgages sucks. There's been a lot of other scandals that happened with them. Ooh, dang! They paid $3 billion. $3 billion payment result of deferred agreement settlement of civil claims. Wow. To pay $3 billion to resolve their potential criminal and civil liability stemming from practice between 2002 and 2016. So damn, this shit went back to 2002. God dog it. It went way back trying to get him. Jesus. As part of the agreement with the United States, California, blah, blah, blah. Dang. $3 billion. Whoa. From 2002 to 2016, gaming practices included forging customer signatures to open accounts without authorization, creating pins to activate unauthorized debit cards, moving money from millions of customer accounts to unauthorized accounts, in practice known internally as simulated funding, opening credit cards and bill pay products without authorization, altering true contact information to prevent customers from learning of unauthorized accounts and prevent Wells Fargo employees from reaching customers to conduct surveys, encouraging customers to open account they would rather want it on. Jesus. Look at that, forging signatures. Whoa, creating pins. Oh my goodness. Dang. That is bad. The top managers. Oh my god, the top managers of the banks were aware of this practice as early as 2002. They knew the conduct was increasing due to sales goals and pressure from management. One internal investigator in 2004 called the problem a growing plague. The following year, another investigator said the problem was spiraling out of control, even after senior managers at the bank directly called into question. Community bank senior leaders refused to alter the model. Wow. Sheesh. That's the last thing you want to do as a bank is like lose trust of like your, because you're such a legitimate thing. You got my money. Don't like, whew, Jesus. I'm surprised they're still like, you know, active. Nonetheless, let's go back. This company started way back in the day, guys. This one the like one of the old, like this is a old company. So actually, the people that started Wells Fargo is the founder that founded American Express. So Henry Wells and William G. Fargo, who founded American Express along with John Butterfield, formed Wells Fargo and Company in 1852 to provide express and banking services to California, which was growing rapidly due to the California gold rush. So it has its earliest and most significant tasks included transporting gold from Philadelphia Mint and express mail delivery that was faster and less expensive than U.S. mail. By the end of the rush, Wells Fargo was a dominant express and banking organization in the West, making large shipment of gold and mail. It was the primary lender. Blah blah blah. Let's see. There you go. So it's really started as a transportation situation. And look at this. This is this is how they used to transport stuff. Like US Mail, Wells Fargo and Company, Overland Stage. I mean, we're talking horse carriages and the whole shebang. Look at this. They started as a transportation company, Stagecoach. Didn't even know this. They have a whole museum apparently, like in San Francisco, but it says it's closed. It says it's closed, but you can see pictures, I guess, of this thing. They used to transport gold and all this other stuff. So yeah, it started as like a express company, and then it became a bank. So, all right. So that's a bit of Wells Fargo, right, guys? So now it's a bank. It's a bank. It's complicated. Like how a bank works, what a bank does. Um, so I want to play this video. I want to play this video that explains sort of how a bank works. So let's watch this video and I'll kind of comment as we go along. HJ, let me know if you want to come up or anybody else. I want to come up and ask me questions and kind of get me going here. But let's see this video, how the US magically creates money. I've talked about this before, right? I've talked about how when a loan gets created, that's when new money enters the system. So this video, I think, does a good job of kind of explaining why we need money in the system to begin with. So let's see. Let's watch this video and we'll come back.
Keep up with demand. These machines are running 24/7.
All right. right.
Every hour of every day, this government facility in Washington, D.C. turns paper into money. In order to keep up with demand, these machines are running 24/7, pumping out more than $500 million into the U.S. economy every day. But this is only a tiny fraction of how much money is really made. Most of our money exists digitally.
Hold on. Let's run that back. So he's talking about an actual printing building in DC. It looks like they make 500 million actual physical dollars every day. Let's see.
Every hour of every day, this government facility in Washington, D.C. turns paper into money. In order to keep up with demand, these machines are running 24/7, pumping out more than $500 million into the U.S. economy every day. But this is only a tiny fraction of how much money is really made. Most of our money exists digitally, and this number currently goes up by more than $4 billion every day.
God damn. It goes up $4 billion every day. Wait a minute. So every day, $4 billion gets released into the money supply. Guys, when I say money supply, we're talking digitally out there in the universe, you know, through the creation of loans. So, I mean, that's the only way money can exist. Let's see.
But where does all of this money come from? Before it ever reached...
Where does this money come from? Like, isn't this kind of important for us to understand what a bank does, right? And how they make money. So let's kind of, look at this.
Your bank account, it changed hands countless times, passing through people, governments, and businesses, all after being simply typed into existence on a computer. We modeled the entire thing to show you how money really works, and how it drives the country, inflates prices, and ultimately puts you in debt. But in order to fully understand how we got to this point, we need to go back to a time before money.
All right, guys. So this is gonna go into the time before money. How did we get to money? But there was a time in human history where we didn't have money. So how did they do it? How did they sort of function in that society without money?
A farmer, thousands of years ago, needed a new tool. He'd go to the local tool maker to buy one. The farmer didn't have anything to give him in return, so instead, they both just agreed that he owed him something in the future. Because the toolmaker trusted the farmer, his promise of future value was an acceptable form of payment. Sure enough, 2 weeks later, the farmer came back and gave him some food from his farm. To make transactions easier, people started to pay using more commonly used items like cattle, grain, and salt. Everyone needed these things, but they were hard to come by, and that's what made them valuable. The farmer...
So before actual money, it looked like salt. And I know this because like my mom was talked about like our great whatever. They used to like use blocks of salt as a way of payment. I'll give you a block of salt for your thing, whatever, 2 blocks of salt. And that's how they would kind of like negotiate some stuff. Amole, let me see. Hold up. It used to be called like amole. Amole salt. Bar of rock salt that were used as a means of payment and currency in Ethiopia. There you go. So this was a form of payment back in the day, mama. Look at that. Look at that. Salt was used as means of exchange in some form or other in all continents, as bars, slabs, or diverse from other shapes. In Ethiopia, salt was traded in forms of bars. They were called amole and were parked in wood shavings to protect them. Until the mid-20th century, amole served as a currency almost throughout Black Africa. Look at that, guys. See? It was before money. You had to get some salt. You had to get some salt and pass it around. This was money before money. So everybody, I guess, needed some salt, to cook and stuff. So I guess it became like some value we all needed. So we came a long way from salt. So what? Like, if I was making some bread, I would have a bunch of salt just sitting around. And I needed to go some clothes. I would take a couple of bars of salt and go over there and exchange it. Oh my goodness. Imagine having to carry around a bunch of salt. Let's see. All right. What y'all think about that? Which I think about salt as a way of paying money. Salt as a way of exchanging value.
Farmer could now buy a tool and pay for it right away, using a precise amount of grain that seemed like a fair exchange. This made transactions quicker, and both parties would leave with something valuable to them. But eventually the demand for trade was too much, and paying with a random mix of bulky objects wasn't good enough. People eventually settled on using metal coins, like gold and silver, since they were small, extremely valuable, and would last forever, unlike cattle or grain.
All right, so we went from grain to gold and silver coins. So, all right, this is valuable, this and that. So we're trying to make it simpler for ourselves. The exchange is always there, right? The exchange of value is always there. It's like, and we always kind of like question things, isn't it? It's like, okay, I want that shirt, but I'll give you like, 2 sodas for it. No, I want 4 sodas. So we're always sort of valuing something, right? Like a shirt or anything, a car. It's like somebody could look at a car and it's like, oh, it's 30,000. It's like, no, that's too much. And somebody's like, oh, only 30,000? Here you go. So we all can see the value of something in different ways, right? So it's that's sort of the whole value and money comes in.
Suddenly, trade around the world opened up, and things were being bought and sold all the way from China to Europe. But traveling with so much gold became heavy and dangerous. This was when the whole idea of money started to change. In 17th century London, trusted gold...
17th century London. So we're talking 1630. This is when money becomes a thing. So guys, listen up. So they're going to talk about exactly how money kind of became a thing. Well, they call it a promissory note. If you look at your dollar bill, it says something about like a promissory note.
Smiths started to take in people's gold coins, started to change. In 17th century London, trusted goldsmiths started to take in people's gold coins, promising to look after them for a small fee. In return,
look at that. Wait, I want to.
Trusted goldsmiths started to take in people's gold coins, promising to look after them for a small fee. In return, they would give the customer a piece of paper, a promise note that allowed them.
I promise to pay the bearer of this note 100 pounds for John Goldsmith.
Them to retrieve their gold at any time. The key to this piece of paper was that the customer could go to any goldsmith in any town and claim back that exact amount of gold.
Man, that is awesome. Hey, we got San in the building. San, you're late. You're late to the class. San, you're late to class. You gotta go get your tardy. What do you call it? Tardy slip. San, you gotta go get a tardy slip. We're talking about money. The video is called "How the U.S. Magically Creates Money." So we're talking about Wells Fargo today. Obviously, they are the money people, the bank. They move money around. They manage money. They watch your money. But let's see where money came from, to begin with. So we're talking about right now. I really want to watch this again because this is a very important part of this video.
Idea of money started to change. In 17th century London, trusted goldsmiths started to take in people's gold coins, promising to look after them for a small fee. In return, they would give the customer a piece of paper, a promise note that allowed them to retrieve their gold at
promise note. That, hey, you know what? If you bring this paper back, I'll give you your gold back. Which is to be able to trust a piece of paper, right? To say, okay, you know what? If I bring this paper and I give it to you, you give me my gold back. That's really when the whole shift changed to where it's like, I don't have to physically give you something valuable. I can give you this piece of paper where you can go retrieve the gold. And then eventually we move away from the gold, which is the whole gold standard thing that, we're going to talk about later. But it started initially as kind of a way to retrieve something more valuable. The paper was just like, hey, this is a promissory note that you can go get a gold with this piece of paper. So it's kind of an interesting thing.
Anytime. The key to this piece of paper was that the customer could go to any goldsmith in any town and claim back that exact amount of gold. The paper itself had no intrinsic value, but it became as good as gold. The notes
As good as gold. It became as good as gold. Is that where the saying came from? That's an interesting thing. I wonder if that was where the saying's coming from. What is going on, people? Who do we have in the house? We got San, we got Bree, we got the usual suspects in the house. We'll get to Wells Fargo here in a bit, guys. But I thought this video was interesting. It's like a 10-minute video. Talks about how money gets created. These banks, make a lot of money kind of managing this process today. But for a bank to exist today, we went through all this little process. Covering a bank is a little bit different than covering like a business that does a service or a product like Lululemon, or what did we do yesterday? Damn, what did we do yesterday? I'm drawing blank. Oh yeah, we did Dollar Tree yesterday. So they sell stuff. A bank is a little different, right? It's like, what do you actually do, a bank? You're just watching my money? Like I just what? Like it's a little weird, right? Where'd you get the money to loan me to begin with? Where you get the money? I wanna loan some money and make some money on the interest. Where do you get the money from? Right? It's the bank is kind of weird. It just kind of is there. I mean, you don't want a bunch of money in your house, so you kind of keep it somewhere. But I know there's checking account, savings account these days that don't have any fees to them. So how do they make money if there's no fees? How do they make money with no fees? There got to be somewhere else. Something else is going on, right? So it's a bit hard to understand how a bank really makes money, right? But we'll get into it. We'll get into it. But I just wanted to watch this video so to see how we got to where even a bank exists. Because at one point, banks did not exist.
Were so convenient that people started simply exchanging them to buy and sell things. The goldsmiths realized that most people weren't actually coming to retrieve their gold, and so they started loaning out fake promise notes to customers. Instant money.
Ooh, y'all hear that? Hold up. Let's run that back.
Convenient that people started simply exchanging them to buy and sell things. The goldsmiths realized that most people weren't actually coming to retrieve their gold, and so they started loaning out fake promise notes to customers. Instant money that had to be paid back with interest, making the goldsmiths a small profit. This was fake money that didn't actually come out of
fake money. That's really where money came from. They just like, wait, we could just say something.
Their gold supply. If a goldsmith loaned out 100 coins, they wouldn't become 100 coins poorer. They'd simply write the customer a fake note that was worth 100 coins, which could be spent anywhere. Eventually, the customer would pay back the loan plus the fee, making the goldsmith 105 coins richer. On top of that, the customer would spend their money by paying someone for goods, making them richer. From that single loan, the total money in existence increased by 100 coins, yet no new coins were produced. This meant that more money was in people's hands than actually existed. As long as everyone didn't come to cash in their notes at the same time, everything would be fine. If we replace the goldsmiths with banks and the promise notes with digital money, we have today's system of money. Now,
bam. Bree's saying fraud. Bree, what you think? This is what I say, man, guys. When I say they create money out of thin air, I literally mean that. I literally mean that. So, man, we gotta go get some money, man. We gotta go get to the bank. We gotta get some loans. We gotta put up this proper report as collateral, whatever we need to do. Let's go get a couple million, and we're gonna just skip out of here. All right, we're just gonna go to Puerto Rico or somewhere, and just just live off the land or something. Yeah. Sad. Are you guys surprised by this? Is this videos like helping you understand how it works, or what you think? I think it's a great video. Like, I'm opening the bank of Bree. Sad. What you think, Sad? We gotta go get some loans, Why not? This is how they're getting rich. As long as I can go give me some money, I just take it over there. Give it to somebody and I get a house. Why not, right? Why not? All right, let's keep watching.
Nowadays, almost everything is bought and sold digitally. But did you know that data brokers buy and sell your own personal data? This could be used against you for things like scam your data. The right to protect and start search data has been data away from the globes. Tourist the code space at checkout to get 20% off. When the 17th century goldsmiths started handing out fake money, it had a profound effect on the economy. Before, no new money could enter the system, and so the money that did exist was simply passed around in a cycle whenever a transaction was made. But this system had a major flaw. Imagine a group of 4 people who have a total of
Listen to this, right? This is where actually adding money to the system is actually needed. Otherwise, there wouldn't be enough money to go around. So, and the economy can't really grow. The issue we have with the current economy is that like 1 or 5% of the people seems to really know how to get a lot of that money, and most of everybody else, they're not as good as getting that money, and that's where the problem comes, right? That's where the wealth inequality happens. But you do need a lot of money in the system, otherwise, but we'll see. Look at this example here. I think it's a good example. Watch.
$100 between them. If person 1 pays person 2 for some food, it moves the money around, making it uneven. Then person 2 pays person 4 for a service, and the money moves again. Note that every time money is passed around, value is made and productivity grows. But eventually, the money supply becomes uneven, and less people can participate, slowing down trade and reducing.
So look at that. So if one guy has all the money, and these people are not participating in the economy, right? Like they don't have any money to spend, then this guy, he can't even get more money. He just stuck with the 100, and it's just like, I want more. Like, I want a service. This is where it gets stuck. So this is why you need more money in the system. The circulation is very important.
Productivity. This system only works if everyone pays each other the exact same amount at the exact same time, something that is impossible in the real world. By adding more money into the system, it speeds up the economy, allowing businesses to grow, products to be made, and ultimately advances our civilization. And so, a constant flow of new money is crucial in our current system. But how is this actually done? We think of banks as places that store our money and keep it safe, but that's...
So how is this actually done, right? How does new supply of money enter the system? That's very, very important to know. How does new money enter into the system? Because if we're only just circulating around money that already exists, eventually, somebody's going to accumulate a lot of it, and there's just not going to be enough money around, right? Somebody's sitting on a lot of money and they have a lot of it. It's like Monopoly. Somebody has all the money and you have no money. You can't, the game becomes boring, right? Because nobody can buy anything, nobody can sell anything. It becomes a thing that's not going to work. The economy is not going to move. So you need to put up money into the system, but how do you do it?
Not really what's going on.
Students with ADHD save 10 hours studying with this Chrome extension.
But no, by all means, go ahead, skip the ad, save a few seconds.
When you give a bank your money, they are in debt to you. The numbers you see.
Wait, guys, did you guys hear that? Hold on.
It's not really what's going on. When you give a bank your money, they are in debt to you. The numbers you see in your bank account aren't real wads of cash sitting in a vault. They're simply promise notes, showing that the bank owes you money and that you can claim it back whenever you want. A loan is the exact same, but in the opposite direction. When banks lend us money, we are in debt to them, and we have to pay them back. This is where money really gets made. Just like the goldsmiths, when a bank gives out a loan, they don't get poorer. They simply type new money into your bank account. It's brand new money that didn't exist before.
It's brand new money that didn't exist before. When they give out a loan, it's brand new money that didn't exist before. Very, very important to know. They usually like to tell you, oh yeah, the deposits that you put in there, that's the money that gets lent out, and then they make money on the interest, and that's how bank. No, they make the money out of thin air. That's why they want to give out loans. A lot of times they do want to give out loans. Obviously, they need the loans back. That's why they check credit and all this other stuff. But they need to. So the loan is how they make money. Yes, exactly. So the interest on the loan is how they make money. But the bigger point here is that new money gets created in the system when the bank gives you a loan, gives somebody a loan. So they give X business $10,000 that is new money that got created and got pumped into the system.
The only difference is that when you pay it back, the money gets canceled out and the bank only keeps the interest. But with that loan, you paid for a new car, and that money eventually made its way to the employees at the dealership. Then they spent that money, and it continued to create hundreds of new transactions, powering businesses, creating new technologies, and providing us with food. All of this value and productivity would never have happened if new money hadn't entered the system.
See that point that he made? So you getting 10,000 from the bank, got new money, got pumped into the system, and the salesman got paid. Well, the guy that made the battery got paid, the guy that made the seat got paid, and all this stuff got paid. So that money was valuable because that money never entered the system. There would have been less money to go around, and they wouldn't get the money to pay their rent and all this other stuff. So this is why you need money in the system, right?
The problem is that productivity doesn't necessarily increase when we create new money, and that can cause inflation. If society starts producing fewer goods, but more money is added into the system, prices will go up.
All right, that's actually a very big point. It's kind of harder to understand, but it's such a big point.
Productivity would never have happened if new money hadn't entered the system. The problem is that productivity doesn't necessarily increase when we create new money, and that can cause inflation.
Productivity doesn't increase when we create new money. What does that mean? Productivity doesn't increase. I don't know. I think that they're saying, that like the wages doesn't really go up, or you're not gonna make like just because there's new money entering the system. It's not like if one person's making one sandwich every 5 minutes, all of a sudden, just because there's new money in the system, that doesn't mean that person can make 2 sandwiches in 5 minutes. So productivity is not related to the money that entered the system. So my money don't grow. Yeah, actually your money is always losing value every single day through inflation. And it's actually a great question, a great point. And this is what they call inflation. Inflation is basically your money being worth less. Most companies, they give you what they call like an inflation a raise, or they call it a living adjustment raise, just to keep up, because every year your money gets like 3 to 5%, loses value of 3 to 5% every year through inflation. So $100 today will be worth like $95 a year from now, or something like that. So your money is always losing value.
If society starts producing fewer goods, but more money is added into the system, prices will go up, since there is more competition for fewer goods. Because of this, banks have to limit how much money they create. In the past, they could only lend out a portion of the actual cash they had in their backup supply. Nowadays, though, banks have almost complete freedom to create as much money as they like. If
banks have complete freedom to create as much money as they like, and during COVID, this is exactly what happened. I think that like in America, we created something like $13 trillion or some crazy amount of money got pumped into the system. How much money got into the system during COVID? Including loans and stimmies. $4.6 trillion in direct funding through several laws. 4.3. The total amount of federal support reached over $5 trillion. $5 trillion got released into the system during COVID. Look at that, $5 trillion. And this was a good question. Where did the COVID aid money go? It was the largest burst of emergency spending, 2 years, 6 laws, and more than 5 million got into the system. But this all went to rich people, and then rich people bought assets with it. That's why we have all the crazy stock market craziness that we see now, gold and silver being expensive, because all this $5 trillion eventually got to the rich people that already had money. It did not stay in the hands of the average person. This $5 trillion got into the hands of rich people, and they couldn't spend it all, so they had to buy assets. This is why every asset class went through the roof post COVID. This is what happened.
If they are running low on backup money, they can simply go to the central bank and ask for more money. And that's where things get ridiculous. To create new money, the government creates a bond, which is essentially a loan that provides a steady income. Banks, corporations, and foreign countries buy these bonds from the US government, and this influx of money goes toward the government's budget. The government uses this money to pay.
Do you guys know what a bond is? Basically, like it's like an IOU. It's like you loaning money to the government. The government always spends more than the tax they bring in, like really bad. Every year they spend more. The government lives paycheck to paycheck. If you guys don't know, the federal government lives paycheck to paycheck. That's what it called the deficit. You guys heard the word deficit? U.S. deficit. So say how much is the deficit? What is the national deficit? A deficit occurs when the federal government spends exceeds its money that brings in. The government has spent $2 trillion more than it has collected in this year alone. $2 trillion more than it collected. It borrowed $2 trillion just this year. And so, the hell? And there you go, guys. So we are broke. Oh yeah. Oh yeah. We're cooked. We're cooked. We are so cooked. And this is like through every, every guy, doesn't matter if it's the Republicans or Democrats or whatever. But yeah, we are super broke. Let's see. All right, let's go back to the video.
Companies and people, and it eventually makes its way back to the banks. The problem is, the US government almost always spends more money than it makes, so it is constantly in debt to those that buy bonds. In order to pay for that debt, it uses the taxpayers' money. Last year, the government spent almost $7 trillion, but your tax money wasn't enough to pay for this. And so the government had to create new bonds to receive more money, putting it further in debt, and the cycle continues. As crazy as it sounds, this system of adding more money through debt is how most of the world operates. It isn't necessarily a bad system. It's just not running anywhere near maximum efficiency. If banks created money for more productive things like businesses, education, and infrastructure, all of this money going into the system could give us higher returns in the long run. And now, time for the Primal Space giveaway. The winner of the...
So there you go, guys. So that is how the banks came to be. How the banks came to be. We needed money in the system, and they are the middle people that are in charge of creating that money and releasing it into the system. And they make a nice little profit doing so. So let's get into some numbers. Let's get into some numbers for Wells Fargo. Let's get into some numbers. What is happening, people? If you're in the viewership, I like this word viewership. If you're in the viewership, say what's up. If you've never been here before, say what's up. Say how you doing, so we can shout you out. What is going on? We're covering Wells Fargo. I haven't even gotten to Wells Fargo. We're like almost an hour in, but I felt like that that foundation was kind of important to get into Wells Fargo, right? The fourth largest, one of the four big banks in America, We got Chase, we got Wells Fargo, we got Bank of America, we got Citibank. Those are what they're called the big four in America. I think Chase being the biggest, but Wells Fargo's not too far behind it. But let's see. So let's look at some numbers from 2024. So this is a little bit of old numbers, but we'll gives us an idea of where they're at, and then we'll get into their stocks, and we'll take some questions from viewership. All right. So 2024, they generated $19.7 billion in net income. So they profit was almost $20 billion in 2024. Not bad, right? Not bad for just kind of holding your money. It's like, hey, man, can you watch my money for me? Not bad for some just sitting around and putting numbers in computers and you make $20 million, right? I mean, they don't have to make anything. They don't have to really sell anything. We all want a loan. We all want credit cards. We all want, checking accounts, savings accounts, etc. I mean, imagine like owning the Dollar Tree company versus like Wells Fargo. Dollar Tree, you got to put all this merchandise in there and you got to worry about people stealing shit and rent. And Wells Fargo's like, yeah, we'll just, make some loans, make some money around, move some money, and we got $20 billion in profit. So let's check out what kind of stuff they offer. So we'll go to wellsfargo.com. So at the top here, you see that there's personal. That's you and I. There's investment and wealth. So what does that mean? Investing. So how do they make money with investing? Let's click on investing. So we got your do-yourself investing, hands-on, control with $0 stock and ETF trades. So you could go and set up an account with them and buy a stock, and it's free. Let's see. They got automated investing. They got an advisor, financial advisor. They got team-based wealth management. So if you got a lot of money, then they can manage your wealth for you. But if you need some financial advice, they got Wells Fargo advisors. Yeah, you call them. Be comfortable, stay on track. You're trying to retire. I'm trying to do this. I'm trying to do that. Look at that. They manage $2.3 trillion managed assets. Woo. So they watch over a lot of people's money. $2.3 trillion in managed assets. Look at that, guys. So they're not playing. They are not playing. This is one of the biggest companies in the world. $2.3 trillion they manage over. So you want to plan for life. You want a new baby, a divorce, marriage. You got education. You want to plan for your education savings plan, this and that. So they got the Wells Fargo advisors. What else they got? Let's see. Wealth management. So this is like if you're super wealthy. They call it the private bank. Let's see. An exclusive experience, they say. See, there's a rich guy with a boat. So you gotta have a boat. Gotta have a boat to be getting in here. You want a client services? This is an exclusive experience. All right. So this is knowledge is power, blah blah blah. So you gotta call them. You can't even do it online. You gotta be able to call them to get this service going. So there's that. So that's investing. Then you got small business. If you're a small business, and I'm sure they'll do checking, credit cards, merchant services, loans, payroll. They do payroll services. Okay. They got lines of credit, SBA loans, healthcare practice financing for practice owners looking to finance. So let's see. What is this? Financing, marketplace. So it looks like buy or start a practice. They got tons of own loan products for small business. All right, what else we got going on? Commercial bank. What does that mean? Business can be complicated. Your bank shouldn't be. You got customers, industries, healthcare. So if you're in a big business, you could do your banking with them. All kinds of banking. So if you're so what do they do with these guys? So what can they do for you? This is a loan and line of credit, all kinds of stuff. If you're a big bank, if you need some money, so they do all kinds of. It's like what you call a full service bank. They got investment banking too for big companies. You know, mergers and acquisitions, equity. Global markets, investment banking, commercial real estate, lending. So they do commercial real estate. So if you want to buy a big building, you can come here and get some of that. If you try to buy a big building, they'll give you some loan for it. So just to say that they're in a lot of different areas. So how does this translate into money? All right. All right. So let's get into the numbers here. Made $20 billion last year in profits. We'll see some of this number here. So hold on 1 second. Hold on, I want to get somewhere. Okay. All right. So this is the CEO. This is the CEO's letter to the investors. So he's saying we have made many changes to our business strategy, blah, blah, blah. So he says after he arrived, they evaluated their business and scaled back several that we determined not to be strategically important. So this includes selling our asset management business, a corporate trust services business, and student lending portfolio. So no more student loan from Wells Fargo. They sold that business. So student lending. Let's see. Really, I didn't know that. Wells Fargo out of student loan business. Oh, it is true. Yes, Wells Fargo's auto student loan business no longer offers new private student loans or refinancing. The bank sold in 2021. For borrowers who had loans, the original, but they are now making payments to First Mark. So they're no longer in the student loan business. I thought student loan business would be a good business to be in. I wonder why they did that. Wow, that's kind of interesting. Did not know that. I mean, student loan, that's a good business. I guess people don't want to pay their student loans though. No, who actually pays back their student loans? Do people pay those things back? I feel like it's like I'll never pay this off. It's like I got $120,000 to study zoology, so I'm not paying that shit back. I'm working at a coffee shop, so I'm not paying that thing back, right? If you got a sociology degree, you paid $89,000 for that thing. Are you really paying that thing back? Who's paying their student loans back? Let me know in the chat. Let's see. Okay, so they're out of the student loan. They are exiting the international wealth management segment and direct auto business. This is actually a good, very interesting one. So you cannot directly get. Did y'all notice they don't offer auto loan straight up? Home loan, auto loan. Let's see. Auto loan. I think that if you have one with them now, but they don't actually. Enroll new. Yeah, so they're saying through your dealer. So you gotta go to like a dealer. You gotta go to a dealer that offers it. You can't like, yeah. So finance a car can be ask your dealer about Wells Fargo auto loans. You see, so you can't go to their website and get an auto loan, which is I wonder why they did that. Uh, so it says right here, Wells Fargo auto loans are only available through our nationwide network of 11,000 dealers. There you go. So they got out of a direct selling of loans on their website, which is kind of interesting. Oh, I wonder why, but I guess we'll have to look into that. Uh, let's see. So they said consumer lending. Consumer lending, that's you and I. We have oriented our consumer lending business by significantly reducing the size of our home lending franchise and increasing our investment in credit cards. So they're getting out of even the home lending business. What's going on here? They tired of people not paying their mortgage, I guess. Let's see. Why did Wells Fargo get out of home lending or slowed down on it? In early 2023, Wells Fargo announced a strategic shift to significantly scale back its home lending business, exiting some areas completely. Let's see. The decision was driven by a combination of factors, including regulatory issues, a challenging market, and a desire to reduce risk and simplify the company. Oh, so the fake account thing got them capped out. I think how much they can loan out. Um, let's see. Too large to manage. Wells Fargo head of consumer lending acknowledged that its home lending business was too large, both in terms of overall size and scope, to properly manage while trying to fix other problems. Rising interest rates, declining mortgage demand, competitive from fintech. Ooh, Rocket Mortgage. Rocket Mortgage got Wells Fargo up out of there for the freaking mortgage business. Isn't that kind of crazy though? Look at this. This made CNN. I'm surprised. Look at that. Wells Fargo's retreating from the mortgage market it once led. This was, what, 2.5 years ago. It's interesting. Wells Fargo, long one of the biggest players in mortgage business, taking a step back. The scandal-driven bank announced a shift, which buys loans made other. Wells Fargo said it is also exit its corresponding business, which buy loans made by other lenders and reduce the size of its mortgage servicing portfolio. Wow, the retreat will likely cause Wells Fargo to lay off some employees. Says mortgage is an important relationship product, and our goal is to continue to be the prime lender to Wells Fargo bank customers as well as minority home buyers. The move comes as Wells Fargo continues to be in trouble with regulators. The consumer paid 1.7 billion over years of payment. We are acute aware of Wells Fargo history since 2016 and the work we need to do to restore public confidence. As part of that review, we determined that our home lending business was too large. What? I guess it was a bad time to be in the mortgage business too, because interest rates were going crazy, and they still are. And okay, so it looked like Quicken Loans, which became Rocket Mortgage now, they toppled them in 2016 as the largest mortgage lender in America. So that's interesting. So they're not really a big player in the home lending and auto lending too. So they're focusing on credit cards. They want you to be swiping, baby. Get your credit cards out of here. Get your cards out and be swiping them things, okay? Swipe, 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 swipe away. That's what they need you to do. They thinking that is the big business right there. Forget the home, forget the car. We need you in debt, buying things you don't need with money you don't have. Okay, buying things you don't need with money you don't have. That's what they need you to do. Wells Fargo needs your help, guys. Go get a credit card and swipe away. Okay, they need your help. Come to come to wellsfargo.com. Go to personal. Let's see what kind of credit cards they got for you. They need you out here, man. They need you out here getting some credit cards because they don't. Let's see. Credit cards, credit cards, credit cards. Let's see. Mm-mm-mm. They got all kinds of stuff for you to choose from. They got 11 cards for you to choose from. Swipe, swipe, swipe. Swipe, swipe, swipe. You got to get in here, guys. They need you, man. They need your help. Gotta help them out. They're struggling. All right. All right, all right, all right. Let's see. Ba-ba-ba. So they see opportunities expanding our auto lending franchise are doing so modestly. Home lending remains important. Swipe or no swiping. Yeah, Brie, you gotta. What are you doing? You're like, this is your American duty. Okay, this is your forget baseball and watching football. Your American duty is to go out here and get credit card and swipe, swipe, swipe. Okay, Wells Fargo needs your help. You know that joke is by George Carlin, so I can't take credit for it. Great bit. Go look at like American consumerism bit, George Carlin. But anyways, let's see, let's see, let's see. Ba-ba-ba. We are pleased with the repositioning of our business, and while our earnings and return in home lending have improved, the business is not yet contributing. We have reduced headcount by 47%, and the amount of third-party loans serviced by 28%. We have reduced our original overhead and da da da. We believe that having a large credit card business is important strategically for us. They need you to get on board, okay? They need you to go get a credit card. These products provide core lending and payment capabilities for consumers. We have the scale and relationships. Come on down and get your credit card, okay? There you go. They've rolled out 11 new cards. And they're doing well. Look, over 2.4 million new credit card accounts opened in 2024. 2.4 million new credit card accounts opened in 2024. But they need you to come down there and get another one. Okay, they need you. They need your help. Let's see. In 2024, we announced a multi-year co-branded agreement to be preferred purchase financing provider for Volkswagen and Audi brands. I mean, who's buying Volkswagen and Audi in America? Who cares? There's like 13 people buying Volkswagen in America. Let's be honest, right? Like, I don't know, man. Who cares? Let's see what else. Anything. Foreign exchange. They do foreign exchange, investment banking. Oh, this is a good one right here. Yeah, actually. Look at this guy. So look at this. So they're bragging about this transaction they were a part of, right? So one particular notable transaction was the Quick Red Company's 11.5 billion acquisition of another company. So when big companies are looking to buy each other or they're looking to merge or something like this, they usually go get a financial institute to help them do that. They do like valuation services, they do, like due diligence stuff. They go raise money for them, like, so this quick let companies, they might not have this level $11.5 billion to go buy this company. So Wells Fargo could have loaned them that money, right? So this is what they're talking about here. So it says Wells Fargo acted as exclusive financial advisor to QuickRet and was the sole underwriter on a financing package. So you guys know what an underwriter is? An underwriter assesses and assumes risk for a fee, operating and insurance. They analyze data like da da da. So underwriter in a loan, right? So in the loan process, an underwriter is a financial professional who assesses the risk of lending money to an individual or business. They act as financial gatekeeper for a lender, meticulously so reviewing the financial information, deciding whether to approve a loan. So the underlying financing is one of the largest non-investment grade commitments ever made by one bank, and the transaction represents the largest cash acquisition ever in the U.S. construction material sector. So wait a minute, I kind of want to look into this. Bam, concrete Wells Fargo. Kind of want to read an article. Where you getting this from? Let's see. Hmm. Oh, look at that. Even a bank needs well another bank to help buy another bank. Wait a minute. Look at this. So PNC Financial Services acquired another bank and they got Wells Fargo to act as a financial advisor to the bank. A bank helping bank buy a bank. What the hell? Oh my lord. Let's see. Hold on. There's no way I can find the pitch. Let me see. Wells Fargo has started sounding out investors for a potential $7 billion bond and loan deal to support acquisition, according to people with knowledge. The debt offering may include approximately 3.9 in high yield bond and loan launched into oh, see, they went and raised the money for them, or did they loan the money to them? Let me see. Let's see. QuickRet Holdings has signed an agreement to acquire Summit Materials for 11.5. This all cash transaction is valued. The deal will merge. Blah blah. Mm, let's see. Meanwhile, huh? I don't know, but so yeah, so they could help. I think they actually raised the money for them through a bond on this, but they're basically can do things like this for you. So they did the underwriting and on the financing package total. Um, the deal was a result of resources, relationship. So this is why they kind of want you to open a checking and a savings account so that when you have bigger needs, you go to them, right? You might start as a you know, one shop, sandwich shop, whatever. You might be the next Jimmy John, right? They don't know. You know, you always need bigger things as you are getting bigger in business. So this is why they want you to come in, open a checking and a savings account, and then you start a relationship with them. Papa. So let's see. So the checking accounts grown in 2024. Um, wealth management. They're focusing on the wealth management. Commercial banking. So we looked at this earlier. We have a great competitive position. Middle market, 30 to 60 relationship managers. We have targeted investment capacity, M&A activity, so mergers and acquisitions. So they do everything. They're trying to cover all bases, but they're getting out of the car business. They're getting out of the car loan business, and they're getting out of the home lending business. But they want to focus on credit cards. They want to focus on, fee-based investment, mergers and acquisitions, investment banking type work. So it looks like that's what they're going to focus on. Let's see some of the numbers for 2024. All right, so we got 3 years of numbers. This is revenue. So it went from 74 billion to 82 billion from 22 to 23, and then slight dip in 2024 to 82.2 billion. Nothing to sneeze at there. And net income at $19 billion, $19.7 billion. So, guys, remember yesterday, we had Dollar Tree at like 6% net income. So what is this? 19.7 divided by 82.2. Look at that, 23%. Do you see why you want to own like a more like 23% profit margin versus 6% yesterday with Dollar Tree? Do you see why it's almost like, always want to like use your brain versus like, I don't know, sell something. I don't know. I think they made $1 billion, right, yesterday. And these guys, they made like $19.7 billion, like helping you with a loan and just looking at the numbers and things like this. Now it's much more complicated than that, but they don't have to sell a physical product. So this is why, everybody wants to own like a more service business, a high margin business. The revenue is there, the profit is there, 23% profit margin. Now, is it investable? We'll look at that later, but they're doing well. They're doing pretty well, making $20 billion in profit. What do you guys think? Are you guys surprised by that number? $20 billion in profits? Wells Fargo made $20 billion last year, guys. What y'all think? Are y'all surprised by that number? You think it's too low? It's too small? It's too... I want to know what the viewers think about that number, $20 billion. There's two parts. I think that's a pretty big number. Yeah, yeah. Be nice, right, Bree? $19.7 billion. Well, now where that money come from? We'll see where the revenue comes from. I kind of want to know where all that number is coming from, but man, now when I do this show, like there's two parts to the show in a way. It's like one is like, is it profitable? Are they doing well? And we look at the revenue. There's like surprising things, and then there's like, is it investable? Which is like this kind of the second part of the show. Is it investable? Can I own this stock and make some money? So there's two parts to the show. I'm sort of interested in how the inner workings of a company is, right? So this is like, I hope you guys find this stuff interesting. To kind of know, like, as we do all these companies, you see like the difference. Yesterday it was 6% profit margin. Today We got a 23% profit margin. So you're like, wait, okay, so what's the difference between the two? Well, this one, they don't sell a physical product. They do a fee-based thing. Um, the other one, they sell $1, $5 stuff. Now they have, how many stores they had? Like 18,000, some crazy amount of stores. You think, I'm sure they're making money, man. They got 18,000 stores. They, it's busy, man. Dollar Tree's always busy. There's always people in there. Da, da, da. And then you look at it, like it's not even close. They make 19 times more than Dollar Tree, for example. Just to kind of put it in perspective. Like it's like if you made $10, 19 times more. Like if you made $10 an hour, it's like, what is 19 times? Like it's somebody making $190. That's how the difference is. That's the difference between Dollar Tree and Wells Fargo. They make 19 times more than Dollar Tree. So, how does this relevant to you? When you're looking to start a business, you want to make a lot of money. You got to look at what you're selling. Like what you're selling matters as much as like how much you're selling or whatever. And we've seen this with other things, right? With clothing stuff. We've been surprised over and over again where we looked at like Michael Kors or whatever, and it's like they were struggling. They were not making any money. And then, you look at other companies like U-Haul or whatever, and they were making way more money than like Michael Kors. So don't be fooled by like, oh man, it's busy. Like Michael Kors is all over the place. Da da da. They cannot be profitable. So this is like just lessons that it ain't as it appears sometimes, So let's see. Let's get into some of this financial review. I already looked at this. All right, let's see. So this is kind of the way they organize their company. So they got the consumer and banking and lending. So this is small and business banking, home lending, credit card, auto, personal lending. And then you got the like commercial banking, which is like middle market banking. So this is like companies that have like 10 locations. They're doing a lot more revenue and that stuff. And they got corporate and investment banking. This is what we saw right now when they help like companies merging and all that kind of stuff. They got the wealth management. This is what we saw earlier with the Wells Fargo advisors and the private bank. Yeah, so they got venture capital, private equity investments, and all this sort of. So that's sort of the different segments. All right, let's see. Operating segments. Okay, there we go. This is what I want to see. Okay. Huh. So consumer banking and lending is $36 billion in revenue. It's a lot of work. But look at that. Net income from that is not as profitable as the corporate investment banking. You guys see this? So they brought in 36 billion from this business. They kept 7 of it. So even some part of the business is more profitable than the other part of the business. This is why sometimes they get rid of like, home lending and stuff like this, because they're like, the margins are not where it needs to be. So it's like 7 divided by 36 is 19%. Then you got over here 7 divided by 19, which is 36%. You see how the corporate investment banking, they want to focus on that because it's a way higher margin over here. Wealth and investment looks like it's not really making that much money, so they might get rid of this wealth management stuff. Corporate is actually losing money, so this is where they got to the 9.19.7. So looks like consumer banking and lending is a big part of their when the consumer. So this is home lending, car, and then commercial investment banking. This is banks, commercial real estate, okay, and markets. So when they say markets right here, guys, they do play in the markets also. They do derivatives, they do all kinds of complicated financial stuff. So they also are buying and selling with money and stuff like that and trying to make a profit. So this is part of this. So they got, this is a lot of a non-interest income. So non-interest income, this is fee-based money, right? This is them charging a fee to do something, or this is them actually making money buying and selling stocks, bonds, whatever. And over here it's a flip. You see how it's interest is a big part of this business, and then over here a big part of the business is non-interest. This is not as profitable over here though. So you got 15, non-interest expenses 12, so costing them too much. This is way profitable right here. This is good stuff here. Income tax expense. Yeah. They might get rid of this business, making them $2 billion, 1.9, but might even want to focus on investment banking, corporate investment banking. Let's see what that is. Commercial corporate investment banking. This right here. You see this, guys? So this directly correlates to where were we? All right, so I want y'all to see this, right? You see this here? Corporate investment banking, commercial banking, and then you got this consumer banking and lending, and this is where small business, consumer, and that's where this is, and this is. And this investment and wealth is right over here, wealth and investment. You see how it correlates? This is why they keep it like that, because this is how they're reporting. Even inside a company, there's different buckets of like little subdivisions that make it's like a mini company inside a company. Like somebody that works over here, they don't really know what's going on over here. You know, you call up somebody over here and asking them about a home lending, whatever, they will refer you to this guy, but they have no idea. It's like a mini company inside. I mean, some of these things, they could be their own standing companies if you really look at it. I mean, this one is bringing in $36 billion alone. Even the smallest one at $12 billion is bigger than the whole Dollar General yesterday. Dollar Tree, $9 billion. So, man, it's really nice to own a bank. It's really, really nice to hold in a bank. People you trust. Let's see what their clients are saying. Wells Fargo have been growing together. Look at that. So they're working with big companies over here. Delta. I mean, we're talking Port of Miami. Let's see. Allied data centers, making data centers greener. Let's see. Let's see who else they got. Health Equity, Invesco. Let's see somebody you guys know. Verizon. So look, I mean,
If you look at the advent of AI, the amount of energy we need to run our networks every single day is growing so quickly. The energy networks that got us to here, they will not get us going forward to where we need to be. We have to continue to evolve, protecting our customers and our communities. At Verizon, being prepared is just in our DNA. We need to be looking at solutions that green the grid, because that's just how we are going to survive as a society. We've found partners like Wells Fargo who share our values and can operate at the scale of Verizon that get us to that next level.
You can't really separate this idea of technology.
hold up. I want to read
Wells
this
Fargo
title.
who share our values and can operate at the scale of Verizon that get us to that next level.
You can't really separate.
So we got Matt Pfeiffer, Managing Director, Technology, Media, and Telecom, Wells Fargo Corporate and Investment Banking. So, guys, when somebody says I'm in investment banking, this is what we're talking about here. So Verizon comes to them and say, I need money, man. I need money to do this. I need you to go out there and find me some money. I need you to lend me some money. I'm going to buy this company. I'm going to merge. So this is what we're talking about when we talk about investment in corporate banking. Corporate banking is different than your banker helping you open like a credit card or something. It's similar, but obviously at a bigger scale. You know what? Let's look up this guy on LinkedIn. Let's look up this guy, man. Let's look him up. We're going to be a little nosy. What's going on, man? We got Matt P. Oh, this guy kind of. Let's see. Wells Fargo. There he goes. There's your boy, Managing Director, New York, New York. So he's been with Wells Fargo for 13 years. And let's see. Managing Director in Wells Fargo's Corporate Investment Banking Group, leading coverage of strategic technology relationship, structures and underwrites new debt financing. Look at that, guys. Underwrites new debt financing. There you go. So Verizon, they don't use their money sometimes. We've seen these corporations, right, talk about debt, like they have debt even though they have cash. Like all these companies we've ever looked at, they have debt. Where did the money come from? They gotta get the banks to help them get this loan. And this is where Matt Pfeiffer comes in. So he gets with this Verizon guy. This is your guy. That's him. And he's telling you he structures and underwrites new debt financing for the purpose of recapitalization, refinancing, leverage buyouts, and acquisition. So I know it's a lot of word. What does recapitalization mean? I think it's like giving you some cash so you can, like, let's say, recap is a corporate finance action that restructures a company's debt and equity mix to change its capital structure, often to improve. So that's getting loan. I think you can buy your own. Let's see. So you go from asset debt to equity to asset debt equity, but you're kind of adjusting. So that basically give you money to do whatever, hey, I have too much equity, so I want to get rid of some equity and get some debt. So he helps you with that. Refinancing. As well as advises and sells a diverse range of bank products. You guys ever use this word, bank products? That includes debt and equity capital markets, cash management, derivative transactions, and investments. He's telling you, man, I got you. You need some money? Come to me. So there you go. So you gotta have these licenses like Series 63, Series 79 to be able to do this. So it's a regulated market. So there's that. So let's see. Let's keep watching.
Really separate this idea of technology innovation and then making this world a greener and better place. This transition has to happen, and it's about how do we make this happen in the most efficient and effective way. When we got that call, it really wasn't about this deal in 2023, but it's how do we work with Verizon over the next 5, 10, 15 years to help them achieve their objectives on the corporate side, but also on the sustainability side.
Since 2019, we've issued 6 $1 billion green bonds for those funds to help finance 27 REPAs all around the United States, which could generate more than 3.6 gigawatts of renewable energy. To stand in front of a large turbine, to see 70
Look at that. So this guy helped Verizon get $6 billion. So what you think he makes off of that? What you think he made off of that? You know what I mean? Even if it's like, how much did he make? When he wrote that loan, he got a nice check. Our boy right here is not working just on pure salary, guys. He gets a little bonus. He gets a little cut for making that loan happen. All right. So this is why a lot of investment bankers make a lot of money. So they're dealing with big numbers. So he got Verizon $6 billion loan. So he's gonna get a little check for that.
70 football fields worth of solar farms. It's really been an outstanding journey where we work green and live green.
It's going to take big players like a Wells Fargo or a Verizon to step up and say, I'm setting the example. It means making the world a more sustainable place.
Remember, guys.
People count on Verizon.
Remember earlier when we saw the video, the bank created the money, put it out there, and that money eventually got to, whoever installed that solar thing or the turbine. It wouldn't happen if this loan didn't happen. So this is the kind of case they'll make why we need bank and we need bankers, because they fuel the economy, this and that and the third. So this is how it works. This is sort of the full circle, the full cycle. Verizon is like, oh, you know what? AI is coming. I need to prepare to be able to support all this demand that's going to come for the internet, for the AI. Well, I need the energy so that my servers don't shut down or whatever. All right, let's go out there and put some turbines and green and blah, blah, blah. I got to get the money. Well, I got to call up Wells Fargo. Yo, I need some money. All right, let me go find you that money. And the loan happens and they make money and this make money. So is that a good explanation? Does that make sense, guys? I kind of want some feedback. Am I kind of talking all over the place, or does that make sense? How watching the video earlier about how the bank creates the loan, puts that money out there, eventually lands with Verizon, and Verizon then spends it, it makes perfect sense. Okay, cool. So there we go. And this is how it works. And this is how they make money. Obviously, Wells Fargo is not doing it for free. It's not only the interest on the loan they make money on, but they also charge money to do this service, right? To go out there and find $6 billion to loan to these guys. It's not easy. So
on Verizon, we count on our partners like Wells Fargo to be there with us.
There you go. There you go, guys. This is me tying together this number right here, corporate investment banking, all that. So my boy Matt Pfeiffer and they brought in $19 billion doing this. $19 billion. I'm not talking about the loan now. I'm talking about the fees and things, right? Non-interest income right here. So this is interest income and non-interest income, right? Non-interest income is that fees, them fees that they get. So how many deals are they doing every day? I mean, how much loan is Wells Fargo issuing every year? This is just one video, right? This is just one transaction. How many transactions like this is happening? Look at all these BlackRock, Port of Miami, Let's see another one. Port of Miami needed some money.
Port Miami is the world's largest cruise port, and currently we're the 10th largest container port in the United States.
Ain't you going to Miami? This is where Santa's gonna be going on a cruise from Miami. So let's see. They look like they might have done some renovations or something. They might have expanded the port, but they needed some money to do that. So let's see. They went to Wells Fargo to get some of that money.
Port Miami is the world's largest cruise port, and currently we're the 10th largest container port in the United States. Located right in the heart of downtown Miami, the port is split down the middle with 9 cruise berths on the north side and the cargo handling operations on the south. By 2030, we expect the majority of the port will have become decarbonized. When the cruise ships are at berth, they're running their diesel generators and creating emissions. We are implementing shore power so that the vessels can turn off their generators and hook into the grid. It's exactly like hooking up an EV vehicle, except the plug is hundreds of times larger. On our cargo side, we currently have 13 ship-to-shore cranes. They can lift a 80,000-pound box. Wow. They can do 30-plus boxes an hour. They stand 180 feet tall. We are in the process of electrifying all of the equipment on port that takes the containers and moves them from the ship to the stack and then onto truck or rail. Every time that we do an infrastructure project, we are addressing sea level rise by increasing the height of the port. What I love about Wells Fargo goes way beyond their competence on the debt issuance that they help us with. It's really the role they play as a trusted advisor.
Since 2020, we have worked with Port Miami to raise $1.5 billion in capital for infrastructure.
There you go. So this boy, you know what I mean? 1.5, another guy. He looking like John Generali. He's down there. He's making it happen, man. Somebody's got to go get these loans.
Port Miami to raise $1.5 billion in capital for infrastructure. When we are approaching clients, we're trying to make sure that we're not prejudging what would be the financial solution that works best for them. Listening to our customer is really an important part of what we do.
In Miami-Dade County, sustainability and environmental justice really is in our DNA. We want to be ready for the future before the future gets here.
So that is what corporate investment banking looks like. So next time you hear that word, corporate investment banking, you know, it's getting with big companies and saying, hey, I need money to do this. I need money to do that. What kind of debt instrument? They'll use this word, debt instrument, or what kind of financial instrument is best for me to use to get what I need, right? This is the value of a banker. This is what they'll tell you. Do I agree with it or not? Who knows? But you know, this is what they'll tell you. This is okay. Let's see. But there's a lot of information here. Okay, so let's look at it. Consumer small business banking, $24 billion. How? Jesus. This is all the fees? This is all the fees, guys. I think. Dang. Net interest income 28.7. 24. Revenue by line of business. Consumer lending. Home lending, credit card, auto, personal. Okay, so this might be small business lending also. Okay, so there's interest in there. Look at that, home lending. Oh, it's a small part of their business now. 3.3 billion. Look at credit card. It's almost double. They do way more. Like they made $6 billion from credit cards. Jesus. Dang. Credit card is way better business for them than auto or personal lending. Look at that. Bree, they need you to sign up for this. They need this number to be 6 billion. Look at that. It's 5.9. If you just get a couple of credit cards and they charge you some interest, they got $6 billion. Wells Fargo made $6 billion in revenue from credit cards. And it's not even a big credit card ish. Like, I don't know. Let's see. What is this? Income statement, net interest income 28. That's the same number up here. Yeah, 28. Oh, how it breaks down deposit related fees. Ooh. Ooh. I feel like signing up with them would put me on the shitty end of the stick. I want to be on the clear. Yeah, and I'm just playing. I'm just playing. But look at wait a minute. Deposit related fees. They made $2.7 billion deposit related fees. Jesus. Deposit related fees. What could that be? Dang. What the hell? Oh, wait. Deposit related fees are charges from a bank for maintaining a deposit account, covering services like account maintenance, cash deposits, ATM withdrawals, and overdraft protection. Wow. There's some do have a monthly fee. They charge cash deposit fees, ATM fees, overdraft. Wow. They made $2.7 billion doing that. Card fees, $4 billion. Mortgage banking, 650 million. Other 400 something. Net charge-offs. Woo! They charged off $3.5 billion. You know what a charge-off is? This is basically like people not paying them back, and they just like, all right, we're never gonna get this money back. 3.5 billion. Dog. Hold up. Bad debt written off by a lender. Yeah, wow. That's bad debt. That's 3.5 billion. They said, we're probably not gonna. This is where they sell your debt to the debt collector. So this is $3.5 billion worth they did last year. Provision for credit losses. Okay, that's plus that. Non-interest expense, 23 billion. Oof. Income before income tax expense, 9.3. Net income, 7 billion. Okay. So they made 7 billion off that. What is this non-interest expense? Ooh, that's like employees and all this other stuff. $23 billion? Sheesh. All right. Return on allocated capital, 14.8%. That's good. Retail branch banks. They got 4,700 locations. They got $36 million customers that are digital active, and mobile is 31 million. Debit card purchase volume, 500 billion. Debit card purchase transactions, 10 billion transactions in debit cards. Jesus. Mortgage banking, net servicing income, net gains, total mortgage banking. Credit card, point of sale volume, $170 billion worth of dollars got transacted on credit cards just from them. $170 billion. Jesus. 2.5 million new credit cards signed up. Oh, credit card loan, 30-day delinquency, 2.9%. That's not bad. That's actually not bad. What? Really? Only 2.9%? So you're telling me 97% of people pay their credit cards on time? I thought it'd be worse than that. That's actually not that bad. Wow. Hold on. This is fascinating stuff for me. Getting into it. Auto 1.1 billion. Oh, it's in revenue. Okay, gotcha. Guys, what y'all think? Isn't that kind of surprising? What do you guys think about this? Only like 3% of the credit card accounts are 30-day plus delinquent, and 90-day plus is only 1.5%. Only 1.5%. Like 98% of people are paying their credit card. What do you? That is amazing. I thought this would be like 40%. This is a surprising number. Man. That is amazing. Let's see. Auto originations. $16 billion. Dog it. They funded $16 billion worth of auto loans. And even cars, only 2.3% are delinquent. 30-day plus. That's it. You telling me 98% of people are paying their car loans on time? That's amazing. Okay, balance sheet. I mean, I could go on and on this stuff. This is a lot. Kind of want to see some other stuff. Commercial balance sheet. Corporate investment banking. This is what I want to see. Lending. Commercial real estate. Equities. Income statement. Deposit related fees, $1 billion. Net gains from trading activities, $5 billion. Wow. Income tax, banking, lending. They made $2.7 billion from lending. Treasury management and payments, $2.7 million. Investment banking, $1.8 billion. This is revenue. Total banking, 7.2. Commercial real estate, $5.1 billion. Wow. Fixed income, currencies, and commodities. What is this? Let me see. I don't know much about this. Fixed income clearing corporation. It provides fixed income market, including U.S. government securities and mortgage-backed securities. It can also refer to that holds fixed income currency. What is that? Fixed income currencies and commodities, $5 billion. Equities, 1.7. Total revenue. Balance sheet. Well, then, okay. Let's see. Total loans. No. Net interest income, 3. Investment, advisory, and other asset-based fees. Look at that. $9.5 billion. Commissions and brokerage service fees, 2.1. Look at that. Woo. They made almost $12 billion just on fees and things. Just fees, $12 billion on fees. Isn't that amazing? My goodness. There's not much going on. There's not much here. Corporate. Corporate balance sheet analysis. All right. So, I mean, there's a lot of details in here that will take us forever to get into. But some interesting stuff. I was surprised at the credit card stuff, though. Anyways, all right. So that's the company. They made 19.7 billion in profit. 30% profit margin. Um, Credit cards, commercial, no, corporate banking, investment banking. That's where the money's coming at. They're kind of getting away from car loans and mortgages. They want to be more of a investment banking type company. So let's see how that translates into their stock, right? Let's get into the stock. Guys, what do y'all think? You have any questions, any comments? Anything that you're wondering about? Who's with me? It's awfully quiet down there in the chat. Who do we have in the house? Do we have Ed J or Bree? Who else is in there? Ba, ba, ba. So let's go into Seeking Alpha. So we are seekingalpha.com. This is a website that breaks down the stock and see if it's investable or not. So we got a rating summary over here on hold. So Seeking Alpha analysts are saying hold. So they're saying if you own it, don't sell it, but don't buy it either. That's what a hold is. Wall Street is saying a buy, barely. It's a barely a buy. It's a very strong buy is 10, buy is a hold is 10. It's not a strong buy, but a buy. Quant is saying hold. Quant means it's like this is the numbers, people. This is the numbers. So looking at all the numbers, valuation, growth, profitability, momentum, revisions is saying hold. It's not a buy, it's not a strong buy, it's hold. So let's see. So we go to ratings. We'll go to summary. We'll go to analysis. All right. So we'll look at this guy. Let's see what he's talking about. Let's see. So he says Wells Fargo's turnaround is real, but the growth story is missing. This is October 6th. What's today? That's like 2 days ago. Let's see what he's got. Wells Fargo is a stable, well-managed, has improved efficiency, but lacks a clear growth catalyst to drive shares higher. It trades near the top of its historical value range. That's true, with most positive already reflected in the price and limited upside without strong earnings growth. The bank's fundamentals are solid with good credit quality and capital levels, but revenue growth remains a key missing piece. Yes, revenue was flat or slightly dipped actually the last couple of years. Is a steady long-term hold for existing investors, but not attractively valued for new buyers given the current price and lack of near-term. So let's see. When I looked at Wells Fargo back in March, I rated it a hold at $70 a share. Right now, it's trading at let's see. What is it trading at right now? $79. Okay. So back in March, it was at 70. Since then, the stock has had a recent run, climbing nearly 16%, even touching a high of 86 before settling at 80. Most of that strength came earlier in the year as investors got comfortable with its clear balance sheet and steady buybacks. Lately, though, the pace has cooled, which makes sense given how much optimism is already built into the price. So he's kind of saying it's already kind of built in. In my view, Wells Fargo is in a good but not great place. The bank is more stable, but right now it's missing a growth story that would take the stock higher. It's trading at 13.8 times earnings with a 2.2% dividend yield. The stock's near at the top of its historical range and trades roughly in line with peers like Bank of America. Investors already seem to be counting on steady execution. There's not much room for disappointment. It's a steady, fair value, cheap enough to buy aggressively, but it's not weak enough to sell either. So it's reshaping its business. Remember, guys, we talked about that. It's getting out of the mortgage business. It's getting out of the car business. It's more focusing on other things, right? So it has four main businesses: consumer banking, lending, commercial banking, corporate and investment banking, and wealth management. It is still largely a retail deposit bank with a solid middle market lending base and a decent wealth platform. Ba- ba. So they lifted this asset cap. This was a big thing. Management is finally able to position. The CFO talked lend more aggressively. There you go. That's an encouraging. Oh, it might take a few quarters before show up. Company has done the hard work. So the banking industry right now is in a mixed environment. Rates are high, inflation is cooling, credit losses are rising. Wells Fargo depends heavily on interest income, which means it's more exposed. Wells Fargo still relies mostly on lending and deposits for its performance. Nah, actually, that's not really true. What we saw here. That's not what we saw. It's more profitable in the corporate side than anything. That's not what we saw here, buddy. I don't know what he's looking at, but what we saw here is that revenue, yeah, I mean 36, 19, but it's just pretty broken up pretty decently actually. This is way profitable for their than this is. So they're trying to go more of on the commercial banking and corporate investment banking. That's where the money's at. So they're gonna need to focus on that. Fintech and digital banks. So saying it relies on lending and deposits, and management has shared plans to expand both following the removal. Company has noted environment. At the same time, new competitive from fintech and digital banks keep pushing the industry forward. Wells Fargo has been investing in automation and online lending tools, but those tables take now. The bank is keeping up, not putting ahead. See revenue, balance sheet looks solid. It's fully priced. This is what this guy is saying. Like it's fairly priced. There's no meat on the bone for you. So that's what's that. What is this guy saying? This guy is saying a buy from asset cap to up capital strength and buybacks, solid balance sheet, and $77 billion returned to the investors. Improving earning, manageable. A company that is moving from defense to offense. Wells Fargo is changing the risk reward for the next 24 months. The lifting of the asset cap and closing on the consecutive orders growth. I see a strongly capitalized organization with a visible path forward, sustainable return on equity around 15%, and specific levers for further improvement, such as deposits, loans, fees, market. The market has now priced in the shift to organic growth, the gradual strengthening of NII through lower deposit betas, and acceleration of capital returns thanks to buybacks. Below, I will analyze the reason the company deserves a buy. Okay, let's see what he says. First of all, the stock has very strong momentum, being at its historical high. From the lows during the pandemic at 20, it climbed with a very strong turn to $80 with the chance of further being high. Let's see. On the chart from the buying signal was given 60, moving towards 94, which appears to be upper limits. The company is a performing company compared to XL fell. Wells Fargo is trading at levels that still looks somewhat compressed. I don't know about that. It delivered return 13. Yeah. The bank's partnership, co-branded auto for Volkswagen with joint lending through Overland Advantage, give more non-interest income sources. This should help earnings hold up and support better valuation. What is Overland Advantage? What's Centerbridge? What's that? Let's see. Overland, a business development company with a differentiated lending approach that benefits between companies. I don't know, some kind of partnership. All right. Let's see. The lifting of the asset cap is not simply the removal of restrict, but catalyst. So they're saying they're going to loan a lot. So it's going to say aggressiveness and commercial reduced. So they're going to loan a lot. Based on this, the multi-year compliance project was completed. 12 billion expense were saved. That means that Wells Fargo can once again pursue deposits and loans with stronger marketing and reintroduce of incentives, more aggressive targeting, and more active commercial policy. Let's see. Mm. So let's see. Practical growth engines, consumer banking, redesigns of sales, strong marketing incentive. The card franchise is being built, first volume, while in auto, the new partnership. The in-home lending is easing, being a sign of stabilization. Premier and the Wells Fargo strategy levers the affluent clients. When the client uses, on average, brings more. Here's the largest upside with trading assets on. Yeah, this is where it's at. I remain by. I see 4 essential risk: credit cycle, execution. Yeah, execution and competition. I don't know. I think it's things are looking well. Will I buy it? It's at a whole time high. It's at an all-time high right now. Never been this high before. Is it really worth it? Did they do anything crazy to earn this? I don't know. I mean, they're kind of getting out of the dark ages now. Um, Not bad. I mean, if they continue pursuing this corporate investment banking and commercial banking, there's a lot of money there. They do have the name. So, if I'm a big company, they're working with Verizon, they're working with the big guys to get the money out there. But there's a lot of competition in investment banking. There's like Goldman Sachs and all these other investment banking that do way more, and they're like more specialized. So they're more known as like a retail bank. Um, mm, Largest investment banks. You know, Goldman Sachs, Morgan Stanley, Citigroup. There's all these other companies that sort of let's see. Goldman Sachs, JP Morgan, Morgan Stanley. These are the ones that I know. Bank of America, Citigroup, Barclay, UBS. Wells Fargo is not really Deutsche Bank. Number 26 on this list. I don't know what this list is, but Raymond James. I don't know. I think that I'm not seeing anything like crazy that makes me want to invest in this. So let's see. Let's see what he says. Actually, let me reread this. I'm proud to report. Our belief remains that we have the most financial services. We are working to be one of the most well-respected financial institutions with high risk adjusted returns over multiple economic cycles. Or transformation. I believe that Wells Fargo has one of the most innovable franchises in the world. We are working hard to achieve these goals. We are much different today than we were 5 years ago. Important of our risk and control work. We have added 10,000 people across number risk groups and spent 25. Wow. Business simplification earnings profile. So our return. So this is what we read about earlier. Consumer lending. So they're saying in consumer lending, we have reoriented our consumer lending business by significantly reducing the size of our home lending and increasing in credit cards. We see opportunities to expand our auto lending franchise. Home lending remains important, but we're working to simplify. But we are pleased with repositioning. Home lending have improved a business that is contributing. We have reduced overhead count by we have reduced our okay. We believe we're having large is important to us. So they're talking about credit cards here. I don't know, man. Nobody's really excited to have a Wells Fargo credit card. Honestly, they're not cool. I don't, and it matters for people. Matters like I don't know credit cards. Nobody cares about the Wells Fargo credit card, active cash. None of these like are this big credit cards. Everybody like built. I know built. I think I don't know they own that. No, it's not branded well, to be honest. It's not branded well. I should know about it. I don't. So that's concerning. These products provide core lending and payment capabilities. We have scaled so a much smaller business. We are pursuing exciting opportunities, auto lending. We have been clear that we are focusing on returns before growth in this business. We Volkswagen, I don't care about that. Corporate investment banking. Oh, this is where I want to know. Corporate investment banking. Wells Fargo has always been significant business, large corporate. We built this business, these growing needs, underwriting. We have become a trusted and be building fee-based. I say all this to make the point that our desire to grow our corporate investment is driven by our clients' need. We must always look where we have competitive advantage. We continue to make investments in talent and technology. We've added 75 hires. Many of these are in key groups with banking. In markets, we have growing doubled. Okay. FX clients have doubled. FX revenue grew. Okay. We also grew our US market share in investment banking with share gains in debt, increased revenue. We're 2 point up from 1.6. Okay, that's nice. Solid pipeline. I don't know. I don't need you to be having solid anything. I need you to do it well. I don't know, man. Commercial banking 60. I mean, they're talking about hiring 60 managers. I don't know. I mean, like I think like this other article said, the growth story is missing. I think that's a big part right here. Growth story is missing is a big part. I don't know how this goes got B. Revenue growth year over year is D. Revenue growth forward is D. What is this? But Mm, I'm not buying. I'm not feeling this stock. I don't know. I don't really see anything. The areas where they want to get into, there's other banks doing it better that's had deeper relationships. I think Wells Fargo still gets looked at as like a retail bank, and on the retail side, they don't have like good branded credit cards. To be honest with you, Chase is kicking their ass in the credit card business. You know, they're not even with any hotels or airlines. It's just them. You know, if I look at Chase or Bank of America, Chase, like Chase credit cards, well, actually, like popular credit cards. Let's see, popular credit cards. Does Wells Fargo ever pop on here? So you got City Double Cash Card, Wells Fargo Active Card, Capital One, Chase, Blue, American Express, Chase, Capital One, American Express, American Express, Discover, Capital One. Nobody's thinking about Wells Fargo. Let's be honest, right? Let's see. Are they showing up in any of this? Chase, Capital One, City, Chase, American Express, Wells Fargo once. But look, US Bank, Wells Fargo 2 times. They're not really showing up. Chase is kicking their ass in the credit card game. So where is cash instant? What are the top credit cards you see? Let me see. I want to see this. Actually, a good question. Physical Apple cards. Okay. Chase Freedom. Yep. Way more debit cards than you're used to. American Express Platinum. Yeah. Nobody talks about Wells Fargo credit cards. Not really, man. American Express, Chase, American Express, City, Capital One. Those are Discover. I don't know. Credit cards, they're not winning. Corporate banking, they're not really like a top brand in there. They're kind of just hanging in there. I'm not seeing where they're gonna grow like a lot. And I think there's already at the top of their price range. I'm not seeing it. I don't really recommend it. They're doing well, it's profitable, but is it growing? Nah, not really. Is there meat on the bone? In my opinion, no. I don't see it. I don't see it. What's going on, people, man? That's the show for today. That's the breakdown. What y'all want to talk about tomorrow? We had a lot of suggestions yesterday. I forget. Oh yeah, Duolingo. We might look at Duolingo tomorrow. Duolingo. Can y'all believe Duolingo is making money? Duolingo is freaking making money. Duolingo. Whoever used Duolingo? I think I've tried to use it for like 13 seconds. You know, everybody has downloaded it, right? Everybody at one point or another thought, yeah, I'm gonna learn Spanish, I'm gonna learn French, I'm gonna learn this. But anybody ever sticks with it and actually learn? Do they actually learn, or is it just like you give them $10? I want to know the retention on this. I want to know what kind of. Can't wait to get into it. Duolingo tomorrow, guys. Thanks for tuning in. Appreciate y'all. If you're still here with me, say what's up. Let's see. Say what's up. If you're first time viewer, thanks for tuning in. If you're on Twitch, what's up, Twitch? If you're on YouTube, say what's up. It's your boy AB. This is the Profit Report where we break down companies, we break down corporations. This week is kind of all over the place. Usually we like to do like a theme where it's like, okay, it's like drink companies or whatever. This week I'm just kind of trying different ways. So yesterday we did Dollar Tree. Today we did Wells Fargo. Tomorrow we're going to do Duolingo. Hey, you never know what you're going to get over here at Profit Report. Thanks for tuning in, guys. I'm about to sign out here. If you don't have any comments, let's see. Duolingo. Investor relations. I can't believe Duolingo is publicly traded. It's craziness. Ba. That's actually cool. Their website. SEC filings. Thank you. Ooh. Bam. God dog. All right. This is what we're going to get into tomorrow, guys. Thanks for tuning in. It's your boy AB. This is the Profit Report. Thanks for being here. Peace out. See you guys tomorrow, same time. We stream daily. Thanks for tuning in. Appreciate y'all. Have a good night. See you guys tomorrow. We are out. Peace.